Imagine two companies that built their reputations on holding digital assets, but for completely different reasons. One borrows heavily to buy Bitcoin and mostly holds it. The other is designed as an actively managed digital asset treasury that aims to earn yield, supply liquidity, and connect blockchain activity to public markets. One is MicroStrategy, the other is Evernorth, which plans to trade under the ticker XRPN once its merger closes. Together, they show how corporate treasuries are moving on-chain. This is not a repeat of my earlier Evernorth episode. If you want the full Ripple, XRP, and RLUSD perspective, check that video next. Here we will compare Evernorth to MicroStrategy, explain why Nasdaq's new tokenization proposal matters, and look at how this shift could reshape how corporations manage digital reserves. In late 2025, Evernorth announced a business combination with Armada Acquisition Corp. II, a Nasdaq-listed SPAC. Armada's ticker changed to XRPN in October 2025, and if the merger closes as expected in early 2026, the combined company would trade on Nasdaq as Evernorth. The deal outlines more than $1 billion in total capital commitments aimed at building an institutional XRP treasury and related services. Unlike MicroStrategy's approach, which primarily accumulates and holds Bitcoin as a treasury reserve, Evernorth's stated intent is to actively deploy XRP for yield and liquidity. Instead of waiting for price action, it treats XRP as productive capital. The company can lend XRP to market makers, provide liquidity for payments, or participate in regulated DeFi programs where allowed. The goal is to earn and compound, not simply speculate. That means Evernorth behaves more like a liquidity provider or fund manager than a buy and hold vault. These activities are forward-looking and subject to regulation, but they define Evernorth's mission. MicroStrategy's story is familiar. Under Michael Saylor, the company transformed into a Bitcoin treasury vehicle, financing purchases with debt and equity raises. By early 2025, the company reported holding around 499,000 Bitcoin and later disclosed additional purchases. The strategy treats Bitcoin as a long-term store of value, not a working capital tool. That approach created headlines and significant gains at times, but it also adds risk because the balance sheet now moves almost entirely with Bitcoin's price. In corporate terms, that is a static balance sheet. Evernorth's model aims for the opposite. Its plan is to deploy XRP and generate real-world yield. When institutions need liquidity for cross-border payments or tokenized asset settlements, Evernorth could lend its holdings, earn fees, and maintain transparent reserves verified on the XRP ledger. That is active capital management rather than speculation. It also introduces the potential for cryptographic proof of reserves, a level of transparency traditional treasuries rarely achieve. Leverage is another key difference. MicroStrategy used corporate debt and convertible notes to expand its Bitcoin position. If the price falls sharply, the company faces pressure on both valuation and debt coverage. Evernorth's approach relies on earned liquidity and reinvestment. Profits from lending or yield programs could be used to buy more XRP over time. It is a self-reinforcing model that grows through performance rather than borrowed leverage. Whether it succeeds will depend on execution and regulation, but the concept represents a major evolution in how digital assets can appear on balance sheets. Nasdaq's role in all of this adds another dimension. For decades, corporate treasuries have operated behind closed doors with quarterly reports and limited real-time insight. Blockchain can change that. Nasdaq has proposed new rules to allow tokenized securities to trade on its systems, using blockchain as a record-keeping layer while staying inside existing securities laws. This does not authorize companies to hold tokens directly as reserves, but it does open the door for public companies to issue tokenized forms of their equity that mirror traditional shares. It is a compliance-based modernization effort, not a regulatory workaround. If that framework is approved, companies like Evernorth could, in theory, issue tokenized shares that investors hold through brokerage accounts or on-chain wallets. That removes friction between public markets and blockchain networks. It is the same direction Ripple's ecosystem has been building toward for years. Ripple built the payment and liquidity rails. Evernorth is designed to operate on top of them, showing how regulated corporate capital might flow across those systems. MicroStrategy's Bitcoin sits idle and generates no yield. Evernorth's XRP reserves are intended to circulate. When institutions need liquidity, Evernorth could provide it and record those movements transparently. That is a shift from speculation to service. It links blockchain function directly to corporate finance. Nasdaq's tokenization proposal treats transparency as a feature, not a threat. Real-time proofs of reserve, instant settlement data, and verifiable ownership could become part of how public companies operate. If this model spreads, we may see a new class of digital asset treasuries emerge across industries. Imagine a company publishing cryptographic reserve data alongside its financial filings. That is where Evernorth hopes to lead, and why its design matters even beyond XRP. For portfolio managers, this evolution expands what digital exposure can look like. Instead of choosing between a volatile coin or a slow ETF, they could own shares of a company that manages digital liquidity professionally under Nasdaq and SEC oversight. It feels familiar while offering blockchain exposure. For crypto holders, it is proof that compliance and decentralization can coexist. Zooming out, MicroStrategy and Evernorth represent two ends of a spectrum. One is speculative accumulation, the other systemic integration. Both models have value. One stores value, the other creates activity. Over time, markets will judge which delivers more sustainable returns with lower risk. Early indicators from institutional lending suggest yield-based systems are more stable, but the results will take time to measure. This comparison also fits inside Ripple's broader ecosystem. Ripple Prime provides institutional brokerage, standard custody secures assets, RLUSD connects fiat liquidity, and Evernorth adds the capital market layer. Together, these form a closed-loop system where value moves, settles, and earns all within one network. That structure is what tokenized finance has been missing. Nasdaq's modernization effort aligns with that vision. The exchange is not reinventing securities, it is updating how they are recorded and verified. Tokenized listings could use blockchain for official record keeping, cutting settlement times from days to seconds. For companies like Evernorth, that means efficiency and compliance improvements at once. For investors, it means real-time ownership data. For Ripple and XRP, it brings their payment and liquidity infrastructure into direct contact with mainstream markets. When Evernorth eventually operates as a public company, its challenge will be execution. Can it deliver yield safely, prove transparency, and sustain compliance in multiple jurisdictions? If it does, it could validate the idea that digital assets are not just speculative instruments, but financial tools that power new corporate structures. That would mark a shift as large as the first companies that adopted the internet for real-time reporting decades ago. Major takeaway 1. Corporate treasuries are moving from static to active. Major takeaway 2. Tokenization and transparency will become standard parts of reporting. Major takeaway 3. Ripple's ecosystem is positioned to supply the liquidity rails those systems need. Major takeaway 4. Evernorth is not just validation for XRP, it is a live test of how finance itself evolves when transparency and compliance converge. This channel is for educational and entertainment purposes only and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please like, subscribe, leave a comment, or share it with a friend.